Over 1 million people around the world follow Wall Street veteran Mark Chaikin for his shockingly accurate stock market predictions, and he just gave them a dire warning. Mark says we're about to witness a historic stock market shakeup that could soon create devastating losses for investors who don't know what's coming. And as a result, you only have 90 days to move your money. You see, Mark spent 50 years on Wall Street at some of the most prestigious hedge funds in history, and he's been on Fox Business and CNBC countless times. But this is a financial story no one else is telling. And if you let this take you by surprise, you could be in for a world of pain. He explains everything in a brand new free report available at rollingcrash.com. He includes the name and ticker of a popular stock that could be directly impacted by what's happening as well. Mark warned of beloved pet brand Chewy before it fell 45%, tech company C Limited before it fell 66%, furniture company Wayfair before it fell 76%, social media favorite Snap before it fell 36%, and food delivery company DoorDash before it fell 65%. Mark even called the Amazon crash before the famous FANG stock fell 35%. So you'll want to avoid the stock in his new report immediately. Again, simply go to rollingcrash.com for your free copy of this new report. Hi, this is Daniela Cambone. Welcome back to the Daniela Cambone Show here on Stansberry Research. Well, speculation is mounting that BlackRock may be in sight of ending a decade-long embargo on spot Bitcoin ETF products in the U.S. Will they be successful? We're going to be getting Clem Chambers' take on this. He's the CEO of Online Blockchain based in London. Clem, always good to have you on. Welcome back to the show.
Great to be on.
So just some context here. We all know the drill. Dozens of asset managers have applied to launch such a fund in the world's largest investment market since really the Winklevoss twins made the first filing in 2013 when Bitcoin was just $1,000. So will BlackRock be successful? Speculation is that they will be. Why BlackRock, Clem?
Well, they're the big boys these days. I mean, they're the 800-pound gorilla. They're the people that own the world. So, it would be natural that they'd want to own Bitcoin. And, they've all wanted it. I mean, and obviously the system hasn't wanted it. The regulator hasn't wanted it. Now, whether they're going to say, well, as you're big, huge, and to be trusted, and we trust you with everything else, we're trusted with Bitcoin, or whether they say, no, don't like the Bitcoin, still don't like crypto, no. Which will be hard because they've kind of said, we hate crypto, but Bitcoin is a commodity, so it's okay. So it'd be hard for them to say to BlackRock, which after all is a paragon of financial services compliance, and to say to them no. And when you look at other ETFs out there, reverse, leveraged, random asset ETFs, why not Bitcoin? But, you've got to understand that the American system wants to shut crypto down. And so they're caught between a rock and a hard place, I think, on this.
Okay, so that's a whole other question for you is why do they want to shoot crypto down so badly? But two, getting back to the timing of it all, right? Because I mentioned BlackRock, but now Fidelity has applied. We have Invesco, WisdomTree, Bitwise, Valkyrie, which have all had applications rejected in the past, applying again. So why weren't they deterred by what they were seeing at the SEC level in regards to crypto? They weren't.
Well, you see, the big corporations are driven by fear. And you don't want to stick your head above the parapet and get it shot off. So you just sit there and you wait for someone else to do it, and then you follow on because you don't want to get fired by, running forward and saying, I'm going to do Bitcoin. Let someone else take that risk. And then when someone else goes forward, you then follow. Now, when, big guys like have been coming forward recently start to come forward, everyone's got to go, well, we've got to go now. We've got to do that. Safety in numbers. We've got to follow the herd. And we wanted to do it anyway, but we didn't want to take the risk. And now we'll be in good company if they say no. And if they say yes, we don't want to be left behind. So, it's that sort of mob mentality, that sort of index tracking, follow the herd mentality of corporations that you're seeing here. So it's only natural that when a couple of really big companies go for a Bitcoin ETF, everyone else goes for it too. So I think that's relatively easy to explain.
So Clem, let's play it out. Let's say BlackRock does get the green light. Does it unleash a wave of buying? What does it do to the Bitcoin price?
Well, it's very interesting that, because this world is meant to say that it's already in the price if it's a good, efficient market. So it should already be in the price. The thing to ask is, with markets, if you get players in the market that are making huge sums from it and are draining the market, they actually drain liquidity. They actually drain the lifeblood out of the asset. And I think you've seen that with gold. So, having a lot of these highly profitable, highly functional, highly ruthless, highly geared up in terms of technology players enter into the market looking to make a lot of money, it isn't necessarily going to be good for that market, because you're basically draining the value out of the market and you're spending it on yachts or on your shareholders or on big shiny buildings. So it isn't necessarily going to be good, because there's 30 or 40% of the population has access to crypto right now. So it's not as if they can't get it. Will it become more mainstream? Will it be more demand? Probably. But, it's a bit like, do you want Darth Vader to open a bar in your town?
I'm not sensing you so bullish, Clem.
Well, I think Bitcoin is done incredibly well and is doing incredibly well. And it's hard to explain how something which is being attacked so, thoroughly around the world.
Yeah.
I mean, I just heard that Belize has shut down crypto in its country. Belize, can you believe that? They've said, if you're doing anything to do with crypto in Belize, stop it. So it's a global move to shut crypto down. And even where they
why
Clem?
To
fiat. And we've seen what they need to do with fiat. They need to debase it because of all the trouble that we got into over COVID. And so we've got large amounts of inflation. Yeah, if you don't control your money supply, you've got a problem as a government. I mean, the government has a monopoly on violence. And if you are violent in any way, they will throw you in jail. And they've got a monopoly on money. And they're not going to lose either. And they don't want to lose their monopoly on money. And, crypto got out of hand. And you could easily say, if you look at the history of crypto, it's punctuated with the biggest criminality in the history of the world. The biggest bank robberies, the biggest heists, the most dangerous players you've ever seen on the criminal horizon. So even if you looked at it like that, it would be natural for government to want to shut it down. I mean, North Koreans hacking hundreds of millions of dollars. I mean, do you want that around if you're the American government and they're your arch enemy building a nuclear weapon, for example? So you can see that government would have a natural antipathy for crypto. And, it got out of the bag. The cat is out of the bag. And, the old joke about first they ignore you, then they laugh at you, and then they attack you. And, that is the cycle of crypto. Crypto is now a significant scale asset with all sorts of wild behavior going on. And, it would be much easier for them if it didn't exist. And they have the tools to try to make it not exist. And I think America is having a good go at it. China's done it, of course. Yeah, and it's not a coincidence that they've allowed Hong Kong to do it so that they can pollute the rest of the world with crypto in their minds anyway. And, America lives or dies by the dollar, and the dollar's got competition. And it's something they don't have control over. And they just can't go out and mint Bitcoin. They can't debase Bitcoin. They can't debase Ethereum. They have no control over the next random Pepe coin that comes along. And, if you've got your US dollar there, and then all of a sudden you've got private sector money. Well, the private sector is fabulously known for being much more efficient and much better at doing the job than the public sector. So you've now got private sector doing money and public sector doing money in competition. If you're public sector, you're going to say, no, we don't want that. We've got to stop that.
This is a perfect segue to talk FedNow. July's right around the corner. This will be the launch of the Fed's payment system. They've made it clear, we get it. It's not a central bank digital currency, but like I've been saying, it's definitely the plumbing system of one. So talk to us about FedNow. Is it something that you believe will completely revolutionize the payment system? I mean, what does it mean for players like Venmo and PayPal?
Well, I mean, firstly, as I understand it, it's only meant to be for the banks, between the Fed and the banks and interbank stuff. And, as Gensler, I almost felt like he was quoting me, and because I said on one of these shows months and months ago, the dollar is already a digital currency. Most dollars are digital. Most money is just, blips on a hard drive. Most of all our wealth these days is digital. So there's nothing new about digital monies. And governments saying they're going to do a digital currency, they've already got one. And actually, Gensler said that. We've already got one. It's called the dollar. So the ability to create technology that makes the actual action of money more efficient and cheaper, obviously is something that's going to happen. And obviously it's going to go towards things like blockchain, because blockchain has a risk-free proven that it's really rather good. I mean, if you think about it, I'm a politician. I come to you, the Fed, and I go, right, invent digital money. Will you programmable digital money? I'm going to say back to you, what? Programmable, so if there's a bug, someone can steal all the money in our country. No. We're not messing with this. We're going to chop down billions of trees and make little slips of paper instead. And, that works. It's proven. It's tested. People still rob it. There's still security issues with it and all that, but that's a given thing. So going digital has to be really, really slow, has to be really, really controlled, has to not have the sort of problems you get with computer software. So it's only ever going to be a very slow process of doing modern digital money in an ever more efficient manner, because they can't afford to make a mistake. And you wouldn't want them to, would you? You wouldn't want the North Koreans to come in and empty your bank account because they'd made some digital money mistake.
Of course. But talk to me about the issue of privacy surrounding central bank digital currencies. Is this not a concern to you? I know you say, well, the dollar's are digital.
What is privacy? Was that old thing you used to have before you got Google?
Well, it's going to get worse, though, because you say the dollar's digital.
It can get worse.
We can make that argument, but
you don't have your telephone listening to you.
But you're not. Absolutely, we have Alexa listening to us. We all know that. But doesn't mean that we just have to accept that now we're going to have zero privacy because we already have so little of it?
Well, we probably have zero privacy already. I mean, it depends on how much of a zero you're talking about. I mean, maybe we have 5%.
But cash is still freedom to people. Cash is still freedom. I could still pay with my money and no one knows what I'm buying.
Well, you can't in lots of places because they won't let you do it. I mean, in Monaco, for example, where I live, you can't spend more than $2,000 in cash, and you're not allowed to. That's gone. That's gone. It's bolted on that one.
So the issue of privacy is not one for you here when we're talking central bank digital currencies?
It's not a thing anymore. It's like saying, how do you wish not to be over 20 anymore? It's gone. It's gone. There is no privacy anymore. If you think you've got privacy, you're mistaken. It's certainly not an improvement on privacy, but you're not going to be losing much. You're losing a tiny amount of what you've got left. You've hardly got any left.
Are there solutions to be outside the system? Are the only two solutions gold and crypto?
Well, I don't think you've got any privacy with gold. You try buying gold and not be on a database that you bought it, unless you dig it up yourself. I mean, that's what people in crypto do, is they take their crypto.
You can buy it and store it offshore, and it's not reported.
Well, I mean, there's lots of ways.
There's plenty of bullion dealers that do that.
There's lots of things that you can do that are very, very niche, that kind of skip around things, like crypto people that pay miners to mine new Bitcoin and pay them in old Bitcoin and stuff like that. But, try buying gold offshore. Try telling your bank that you want to send money to an offshore bank to buy you gold and see how fast they cut you off your bank account.
Right.
So, it's all gone. It's all gone now. It's not all gone. I'm exaggerating, but it's mainly gone. I can't even draw up a will without filling out an AML and KYC document. A will. I'm not planning to run off with any money or launder any drugs. I'm just planning to die. And I still have to KYC and AML. I mean, it's that privacy thing, that all went away. If you talk about dog food on your telephone and you get dog food ads tomorrow, don't think it just stops at Google, do you?
I guess people are going to say, well, has Clem just become complacent and kind of given up here? That's what it seems like.
Realistic. It's realistic. that is the situation that people have, on the margins they have privacy. But, we are in this Orwellian 1984 world. And, you either shuffle on or, or you spend huge amounts of time trying to get around it. In China, if you don't have a smartphone, they come round your house because you must be a bad person because they can't listen to you. And that's only several steps away from where we'll be in a few years' time. And is anybody fighting it? No. Does anybody even say these people are listening to your telephones? And everybody knows now that it happens because they all see the ads in the subjects that they were talking about a few hours ago. So, that is the status right now. So to say with these central bank currencies you're going to lose your privacy, well, you're going to lose a tiny amount of it because 90% of it is gone in the last 10, 15 years. And we had it, and now it's gone, right? There's cameras on every corner. You can't go out in places like Europe, in the city, and not be on a camera.
So let me back it up. Let me back it up a second. Because, okay, back to FedNow, right? Okay, it's coming in July. We get it. It's a payment system. But at the same time, Powell has been very vocal saying that, well, he's kind of sent mixed messages, right? First, he was saying they have no interest in exploring a central bank digital currency, that it wouldn't be the Fed's place. Then they were saying that, they should be looking at it or examining it in the United States, but that if there were one, it's not something that would be regulated by an institution, but would be regulated by governments. So what do you think? Does the Fed want a central bank digital currency is the question. And what do you make of states like Florida who are looking to ban them?
Well, I think that if you can get a political process that gives individuals and keeps individuals' rights, that's very good. But the drive of the direction of travel is less and less and less of that financial privacy, and general privacy. And the real driver behind it is taxation, because governments are centralizing power and taking more and more power away from the individual and taking it to themselves. But for that, they need money. And for that money, they need to scalp you. And if you don't want to be scalped, then they need to make sure that you are. And so what you're seeing is not, all this KYC and AML was meant to stop drug dealers, right, and drug runners. There's more drugs today than there's ever been. And they don't say, oh, well, we'll scrap this KYC and AML because it doesn't work and it didn't do anything to solve the thing that we put it in for. No, because that wasn't what they put it in for. They did it to make sure that they could track the money because they want their cut. And the demand for taxation only ever goes up and only ever will go up. And will continue to only ever go up. And the more it goes up, the need for taxation, the more they need to make sure that people aren't weaseling out of it. And so, that is the vicious cycle of this. And, it's pretty horrible, really.
Let's talk about the US dollar. I want to get your stance, Clem, on the topic of de-dollarization. My question is, how much longer? Maybe it's forever for you. I don't know. I'm about to find out. Can the US dollar last as the world's default currency? The BRICS are meeting this August for an extremely important summit with this exact item on their agenda. Can the BRICS issue a currency, in your opinion, that could overtake the US dollar as the reserve?
Well, I think anybody coming up against the dollar will come up with the same problem that OPEC always has, which is they all agree that they're going to do something and they go around and stab each other in the back. Yeah, America is very consistent, is proven, and in a sense, it's the risk that you take by using the dollar as your reserve currency is known and a given. And so I think there's a sort of iconoclast view of if only America would lose its reserve currency. But it's like gold. Gold is going to go through the roof. Gold is going to go through the roof. And even I off and on get convinced about that, and it never does. And the dollar's going to crash and burn, the dollar's going to crash and burn, and it never does. So the history of the prediction is pretty weak. And the likelihood of it happening in the short term is pretty weak. Will it happen in the end? Maybe. But you'll read about it 1,000 times before it happens. So, depending on your point of view, unfortunately or fortunately, the dollar is going to be the dominant currency for, it'll be still the reserve currency of the world after I'm gone, which might be soon.
Clem, let's talk about your forecast here, because getting back to, you mentioned gold, and I want to talk Bitcoin again here, because the last time you were on, you were quite bearish on your price forecast, at least for Bitcoin, but it was in the height of the FTX scandal. You're talking 17,000, even 13,000 Bitcoin. Have you had a reversal here on the forecast and your forecast for gold as well?
Well, I mean, it got down to 15, and I called it down from 60 to 13. It got to 15. It turned around, and I still thought it would go to 13. And right now, the only thing that explains to me Bitcoin's strength is the fact that certain people in Russia have a need to move about really fast at the drop of a hat. And as you saw with all the what went on in Russia over last weekend, up went Bitcoin 3 days. Something wicked this way comes, and then Bob's your uncle. Russia's nearly in civil war, and now that was all sorted out, down it's come. So I think Bitcoin has proved itself to be the ultimate flight capital, the ultimate haven asset, and has kind of really spoiled gold's position there. And that is really the most powerful use case for Bitcoin right now, and certain other cryptos too, which means in this crazy world that we live in, that there is a lot of intrinsic value in that, because there's not much of it. I mean, there isn't that much of it.
Right.
And if somebody like an oligarch thinks he wants to put 25% of his billions into Bitcoin, it is really going to move the price. So I think, as long as there's trouble on the horizon, Bitcoin has this sort of has this support. And that's the only thing in my mind that I can square with the current strength of it. And of course, it's probably not going to go away, because the Ukrainian war is not going to end overnight. It's probably got a year or two, or even 3 or even 5 to run. So that will give it strength. Now the halving is coming next year. That will also give it strength. And I've always felt that it would fall down to that 10 to 13 level and stay there for quite a long time. Didn't quite get there, and it turned around, and it's up at 30,000, which is extremely strong. I'm not a buyer at these prices. I mean, I'm essentially very long crypto because I work in the industry, so I'm very happy that it's up there. But I think it's much more to do with geopolitics, which is extremely hard to predict, than it is anything else.
So, I mean, it's renewed talk of, $80,000, $100,000 Bitcoin. Does that sound crazy to you, or realistic?
Well, it's going to halve, and there'll probably be another, unless of course our people at the SEC, etc., do and deliver a pretty strong blow to it. It would seem that it's would go in the next 3 or 4 years to 100,000. Relatively, who would say that it isn't? Not tomorrow, but after the halvening, or around the halvening, or after the halvening has taken effect by cutting the supply, I think that is definitely on the cards. Would I be a buyer now? Well, not really. I mean, the SEC came out with its cudgels and was pretty clear what they were going to do, and they haven't completed that process yet. And so until they've actually followed through, and we get more news on what they are up to, and until we hear that they've changed their minds, which I can't imagine would happen unless the Republicans, got into the presidency or took a very strong line, obviously in the House and Senate. I don't see that crypto is going to be anything but under a dark cloud. But what I say is one thing, and the old trader maxim is you trade what you see. And you look at crypto, and you look at Bitcoin in particular, there's nothing but strength there. I mean, it's strong. I mean, you can't say it isn't. So I think that is I look at it and I go, it's strong. Geopolitics, can't predict geopolitics. It will go far at some point, but until we get closer to the halvening, it's not the time to go long.
What about equities in general, Clem? Are you bullish? U.S. equities?
Well, again, you have to ask yourself, what the devil's going on there? And I think what is going on there is money is starting to be pushed out of the reverse repo section of the market, which is where banks stash the cash when they've been given it by the government and they don't want to put it at risk, because at the end of the day, there's no point in earning 5% interest if you're going to lose 100% when you lend it to somebody. So all that money got pushed into the economy, and all the large banks that had access to that money or had that money pushed on them just stuck it back on the reverse repo. And there's huge sums there, and it's stuck. So the previous bank trouble we saw a few weeks ago was really in banks that didn't have access to the sort of money that gets stuck in reverse repo. So when the Fed tightened and the money went out, the tide of money went out, they were left high and dry, whereas the big guys could always go to the reverse repo and pull it out. And you're seeing that money coming out of reverse repo now, and I suspect it's coming out, and I think it's 4 trillion. I mean, it's a lot of money. It's coming out and it's going into equities. But there's this thinning of equities that I find very worrying, which is it's an ever smaller group of outrageously valued companies that are propping these indices up. And that as soon as you get beyond, say, 10 companies, those other companies have a tendency to be actually struggling. So that is a bit strange. It seems systemic. It seems one of those things that could, one of those situations that could change. And I really find it very difficult to square the valuations of companies which are worth, hundreds of dollars per human being on Earth. So I like to buy cheap broken stocks that are great companies that everybody hates. I'm a contrarian, so all these glory stocks that the whole American financial system relies on at the moment, because heaven forbid that they actually did crash, is something that passes me by. Although AI, I was writing about AMD before it took off. There are opportunities there in places like that.
In the infrastructure
in general, or software infrastructure?
For AI, like if you're investing in AI.
I almost want to say everything, but the thing about the US is that the US is very ahead of the curve when it comes to pricing these things. So if you look at NVIDIA, it's enough to make your
right.
eyebrows fall out. But AMD, on the other hand, not so bad. So that was quite a nice one. But even there, it's very expensive. So it's not like, if you can find value, anything connected with AI at all that has normal value, it would be a great buy. And that was AMD for me, but it's gone up quite a lot since then.
Finally, Clem, let's just wrap with the wild cards for you. Anything keeping you up at night, besides the presidential election, of course?
Well, it's not just America that has a completely insane political dynamic at the moment. And, I think the world is just such a mess. It is just such a mess. And so that actually should be good, because you should be able to buy into the mess, knowing that it's going to sort itself out. And that's kind of my position right now. But it certainly gives you a ride for your money. And I'm getting a ride for my money right now, because I'm very long, because in the market where I'm got my most expertise, which is the UK market, the valuations are as silly cheap as the valuations are sillily expensive in America. And you can take a really big company in the UK that's valued at a quarter or a fifth of the American equivalent. And of course, at some point, companies are going to show up from abroad and snaffle these companies up. But it must have taken a long time. And this massive inertia, post-COVID inertia that you're seeing, when I'm in the countryside, I look up at the sky and I see planes. There's only half of them up there now. And people are working from home, allegedly. And there's huge lags in various parts of the economy. And that inertia, that lagging, I think is quite a interesting negative that I hope is going to pan out soon, and we get back to some sort of reactive normality. Because if we don't, there's going to be very serious economic ramifications.
Let's end on a lighter note here. Even though I like how you said the world's a mess, but it will sort itself out. So that is a positive note. But on a lighter note, if Elon Musk does take on Mark Zuckerberg in a fight, where do you place your money? What bet would you take there?
Well, you see, unless he is the Borg, unless he is Mr. Artificial Intelligence from another planet, the man who fell to Earth, unless he's been training with, some kung fu master for the last year, not telling anybody.
Right.
I mean, you go up against a black belt in jiu-jitsu, you're going to get your neck folded, aren't you, in 3 places? I mean, Zuckerberg is a black belt in jiu-jitsu, and that don't come cheap. I mean, that is a majorly interesting martial art, and people take it incredibly seriously, and they're amazingly good at it. So unless you have got, Mr. McGregor training you every day for a couple of years.
Well, the latest is, I heard George St. Pierre of my city, Montreal, has offered to train Elon Musk. So we'll see where that goes.
It'll be too late now.
Clem Chambers.
There's no way that he's going to be able to fight a black belt in jiu-jitsu with 6 months training.
Well, did you watch The Karate Kid? Anything is possible.
Well, I doubt if he can stand on one leg on
There we go. Clem Chambers, I love talking to you. Thank you so much for coming back on the show.
See you again soon.
Absolutely. Thanks, Clem, and thank you all for watching. We'll have much more incredible content coming your way, so be sure to stay tuned to the Daniela Camboni Show and sign up at danielacamboni.com to stay on top of it all. That's it for me. Thanks for watching.
Opinions expressed on this program are solely those of the contributor and do not necessarily reflect the opinions of Stansberry Research, its parent company, or affiliates.